Hi traders, and welcome to my video on continuation gaps. In this video you're going to see how you can jump into big trends like this one at a favorable price point and maximize the potential left in the move as much as possible. It's a very basic trading strategy. It can be used on any trading instrument, Forex, stocks, commodities, indices, cryptos, etc. This is the euro dollar 1 hour chart. Okay, it's actually a weekend gap here. As you can see, the market is in a downtrend here. We can see that we have our resistance either here or here for most recent resistance. Price was making higher lows, forming this almost this wedge pattern. The resistance was tested, let's say arguably 1, 2, 3 times, at least twice. Sort of the M chart pattern here. If you can see, let's just spell it out for you. So we had our M chart pattern there. Okay. Support, resistance, breakout to the downside. So that was good bearish indicators. We have some bearish candlestick patterns here. I do have many videos on candlestick patterns you can check out. It's good to be aware of them for confirmation of trades. So this is where the initial breakout happened. If you were watching the charts now, you might have considered entering around this breakout here. See from this big candle, probably quite a few traders were doing so. However, for the purpose of this video, we're going to focus on entering based on the continuation gap. Okay, so the purpose of the continuation gap is we've established a trend and we're going to look to get in as it continues. Okay, so there's the gap there, clear as day. Like I said, a weekend gap. Spreads might have been high around the market open, but you don't necessarily need to enter straight on the opening of the gap. You can wait just to see how price plays out, which would have been a wise idea in this instance if we just would have waited for the slight pullback we had there. You have almost a 3 inside down candlestick pattern, a spinning top candlestick pattern bearish as well. This would have been possibly a good time to enter on this breakout here. As you can see, we have our trend, have our breakout, and there's 50 odd pips you could have made from this move simply from a continuation gap. It is that easy. Very basic trading strategy. Not my favorite, to be honest. I like to trade Forex, and these gaps they tend to only really occur on after the weekend close predominantly. And the thing about the opening of the market, whether that's Sunday night where you are, Monday morning, the spreads can be high, the conditions aren't always as favorable to trade, but trading the gap is a well-known old school strategy that you can have some success with. Some traders will mark the low and the high of the previous trading session and look to trade the gap based on that. But for a continuation gap, simple as that. Look for a trend and look to enter on a breakout of a continuation gap. Okay, and in terms of money management, you could have placed your stop loss just above the high here, less than 10 pips, which is really good for the 1 hour chart. As price pulled back around this area, if we had locked in break even, we may have been taken out, but we probably would have closed some in the position for a nice bit of profit down around here somewhere, especially as we see these few big bull candles here, suggesting a market reversal. We also have the level of support here indicating a potential to exit. I will say as well, even if we were over here, you can still bear in mind the continuation. I mean, if you don't get the gap at the exact time that it occurs, if we extend this support level, we can see support then actually holds up as resistance. So if you look back at the gap, you keep that in mind, you could have possibly traded off a bounce of this resistance you see from this falling star candlestick pattern here, followed by a bearish candlestick pattern. There would have been an opportunity, and this is squeezed. You can see this support here. Price is consolidating. That breakout there, you know, there's still a good breakout there. Okay, not the best or the biggest trade in the world, plus the trend seems to be coming to an end, but it was there nonetheless. Okay, here's another example of a continuation gap I wanted to show you. This one's not as obvious to the eye, but it is a gap nonetheless. So again, we have our support level. This is actually a W pattern, so price forms a W basically down here, up, down, up, and then we look to trade on the breakout. It's also a triple bottom because the resistance has been hit at the bottom. The support has been hit 3 times, 1, 2, 3, at least 3 times. Then you just draw basically your resistance within that, known as the neckline. As I said, also a W pattern has formed and you can trade on the breakout there, but that's a different strategy altogether. For the continuation gaps, basically I'm mentioning this just because it would be wrong for me not to. If I'm just going to point out the continuation gap and not see something as obvious as this, I mean, I might as well not be doing trading videos. If you can just pick up tidbits here and there, I think it can just be nothing but beneficial. You know, these are things you're going to look out for regardless of your trading strategy. You want to know where support and resistance is. You want to have your price action patterns in mind, your candlestick patterns. Anyway, continuation gap on topic. There it is. Not obvious, but it's a gap because the price closed here on this low and it opened up here. So that is our gap there. It's not the biggest gap in the world, but it's still a gap. Granted, this is a bearish candle. Some may say that a continuation gap would have to be either 2 bull candles or 2 bear candles. I'm not as fussy. This I can see as a clear uptrend. I'm seeing this as a pullback. I don't expect price to break down here, especially not after all this bearish action. I'm expecting a turnaround in line with this trend that we have going on at the moment. Okay. And then again, price opens, we could jump straight in if we like, or we can just mark out recent resistance and just wait for the breakout there. And you can see textbook breakout, big candle there, would have been a good time to enter on that particular continuation gap from this uptrend. Okay. In this instance, stop loss may have been just below this level of support somewhere, and as we've seen all this consolidation here, price failing to make new highs, you might start considering to either exit the position or take some profit and perhaps lock the rest in case price turned around. Okay, so that's the basic of continuation patterns. I like to confirm them with other forms of price action analysis and candlestick patterns, and of course, as always, have good money management in place. Okay, hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe for more.